Hey, fellow Stockcardians, happy Thursday, June 17th, 2021. I'm Hoda, a Stockcard CEO, reporting to you from a mixed stock market. I took a quick look at the stock market indices and shared a detailed stock analysis for Upstart Holding, one of the most suggested stocks by the Stockcard's VIP community. The stock market indices finished Thursday with mixed results, one day after the Fed discussed the possibility of 2 interest rate hikes in 2023. The weekly new jobless claims report came out, and there was a 37,000 increase compared to last week's figure. Overall, the market is still trying to figure out whether the market is up for a correction due to forces such as inflation, or it can continue to rally thanks to the reopening. Today, I'm looking at one of the most suggested stocks by Stockcard's VIP users. You may know that Stockcard VIP users have access to the Our Strategy section on each stock card. In this section, they can see two things. First one is an automated score that our software generates to identify how good of a fit is any particular stock for a buy and hold, dividend, or speculative investment strategies. They can also see the reasons any of Stockcard's portfolio publishers have had when they bought or sold a particular stock. If no one has looked at the stock yet, VIP users have a chance to suggest their stock to portfolio publishers. It always ends up being an excellent source of new ideas by the VIP community. Let's get to stock analysis of one of the most suggested stocks by the Stockcard VIP community, Upstart Holdings. Ticker UPST. Upstart Holding is a new IPO from Silicon Valley in the financial technology sector that happens to be profitable. It uses artificial intelligence to better match customers who look for a loan with lenders who would provide it. Of course, when you combine Silicon Valley, fintech, and profitability, you'd expect overvalued stocks. Certainly, with financial ratios such as price to earnings ratio or price to sales ratio, the stock is overvalued. The question is whether the overvaluation is justified. The company has high growth potential because it applies better technology in the financial sector. On the company's website, it claims that its AI technology has been able to assess the creditworthiness of applicants better than traditional models, resulting in 26% more borrowers getting approved and yielding 10% lower average APRs for the approved loans. My husband and I just went through a mortgage application, and I know firsthand how inefficient and frustrating the mortgage underwriting process is. That's certainly a reason to be excited about the future of Upstarts because it can simplify the inefficiencies that exist in the borrowing process in the financial services industry. Going through the company's operational metrics, its revenue is expected to grow by 163% in the current fiscal year. The majority of loans that Upstart's processes generate are originated by its 12 bank partners who originated about 170,000 new loans in the first quarter of 2021 alone. It's important to notice that the company is only focused on personal loans and still has a large expansion opportunity to other credit products such as car loans and mortgages. That means the growth opportunity is quite massive. Now let's turn our attention to some of the risks and shortcomings of Upstart Holdings. Inherently, all new IPOs are risky. The lack of operational information history makes our analysis harder than more established companies. That's why you see several gray areas on the company's stock card. The other challenge is that the company is quite dependent on one of its partner banks for the majority of its revenue. At the end of 2020, Cross River Bank CRB originated 67% of all the loans facilitated by Upstart and represented 63% of its total revenue. This means Upstart still has a long way to sell its product to other regional banks and credit unions in the US. We also can't forget about the competition. The use of artificial intelligence and modernization of bank infrastructure is a priority for almost all banks and credit unions. Upstart is not the only vendor in this market. Click on Credit Services Collection on the left-hand menu of Upstart's stock card, or type in Credit Services in the search bar, and 142 stocks appear on the list, Upstart being one of them. It's not easy to develop a well-performing AI model to assess consumer creditworthiness, but Upstart isn't alone. We have seen how Lending Club, ticker LC's stock, has struggled in the last few years, and these two companies offer very similar products. The last concern I have is that acquiring customers is quite expensive in the financial services industry. Upstart is quite reliant on Credit Karma for more than 50% of its traffic. Put all the good and bad together, and I prefer to watch the stock for a few more quarters before jumping in. Upstart Holding's stock analysis shows a fintech company with a large market opportunity, but too much reliance on a few key partners for its growth and customer acquisition. Upstart is one of the so-called hidden gem smaller stocks that have created a lot of conversation on social media, including Twitter, and some risk-taker investors may jump in if they are comfortable with the stock's volatility. As I said, I prefer to watch it for a few more earning releases before jumping in. That's it for today. If you haven't already done so, please give a stock card a try. Research as many stocks and ETFs that you want, and consider following a few successful investors by visiting the stock picks page on a stock card platform. And don't forget to sign up for a 14-day free trial and apply promo code ROLL with our CEO, all lowercase and in one word, to get an additional 10% discount. And as always, help us grow the stock card community by liking, subscribing, and sharing these daily market recap reports with your fellow investors. I'll see you tomorrow.